current financial, in order to form opinions about the firm's value, about the firm's situation. Okay? So we have financial information providers. So role of financial reporting. This is key. I mean, this is where we start off. We have the useful information providing. This is financial reporting. Financial reporting provides useful information for economic decision making. Financial statement analysis gathers those information and analyzes it. Okay, so what kind of information we might have?
Profit loss.
Profit and loss, and then
Cash flow statement.
cash flow statement, and then balance sheet. Okay.
Statement of
What else?
ownership.
Changes in equity.
Okay. Key financial statements. So before we dwell into this, balance sheet, income statement, those fancy names, cash flow statement, and then we have other comprehensive income, then we have comprehensive income statement altogether. Before we have those fancy names, how it all started. I mean, why we have these, reports? Why we have only these reports? Why there is let me clarify my question. Why why there is a need for a standardized report?
To make comparison.
Compare this first.
To compare, then. So what's your name?
Mine is Rahim.
Rahim. To compare. That I agree. What else? Anna.
Maybe for the PMIs, for example, financial performance.
Agreed.
Outcome for example, terms of the year.
So let's forget. Let's say it's not 2015. We are in 1600s, and we are opening a I don't know, water shop or something. And you are alone. This is your business. You are starting your business. Everything is okay. You are starting making money. Okay. You have an excellent idea of selling, lemonade in 1600. Okay. You started selling it. Selling. Okay, everything is going well. And then, okay, suddenly, some idea came to your mind that, okay, lemonade is good. Let's start with, you found the formula of Coca-Cola, let's say, and you're saying, okay, I want to start the second line of my operations, okay, and that is, I need money for that, okay. So if you want money, what you're gonna do?
Invest.
Yes, invest your own money. I mean, you have been making money for a while, so you gather all those money and you put into the business. Okay, it goes well, and you have the third line, funda, for example. And when you have funda, you don't have that much money to invest into funda. Okay, what do?
Borrow.
You borrow money. So the responsibility is not yours anymore. It's not only yours anymore. Okay. You have to report to some other guy. And that other guy, he will not trust, your words only. He will need some information, some reliable information. We will come to all the concepts as well. Don't worry. Don't forget about lemonade, Coca-Cola, Fanta thing. We will come to that. So, I saw this. So, the company is borrowing, right? The company is borrowing. So you have to report. Then, after some successful ideas, there's a need for another line of financing. And then, banks stop, or in 1600s, I assume we didn't have banks. In 1600s, there would be guys with money. So they are reluctant to pay you another day. they say, okay, you are screwed up, you cannot pay your own debt. If I give another one, you're gonna default. So what this guy, what you are gonna do, you are gonna go to investors, equity investors, and say that, okay, I'm selling half of my business, and the money that you're gonna receive, I'm gonna put into the business. Okay? So now you have three players in the business. You, debt provider, and equity provider. And all of them, need some information. You could go and say, I don't know, you have worked in Azerbaijan with Azeri companies or not, especially with startups. I worked with them a lot. When they start talking about their business, they're like, my business is super good, the business. But when it comes to the financial statements, they're like, they can tell you anything, especially with companies that operate for 2 years. You ask them, okay, what were your sales numbers in the last 2 years? They're like, okay, it was 60,000, 60 million, and then the next time they forget about it, they tell a different number. Okay, so for example, you ask them, okay, what was your cost of goods sold? Maliyyə. They're like, okay, it was 50% of the sales, and you're like, okay, 50%. You're starting the because there's no standardized things here. You have to gather all the information and put the data yourself. 50%. Next time you ask them, it's like 60%. And you're asking, what is the difference between 50%? Why there's a difference? Last time you said 50%, this time 60%. He said that, okay, I forgot to include sales expenses as part of cost of goods sold. And you're like, oh my God, what's happening? Okay? So there's a need for what I'm coming to is, there's a need for standardized statements. And this need was arising from what? From investors like you and me, from financial experts like you and me, from banks, who said, okay, these guys every time they're telling me, different numbers. Let's standardize things. Okay? Okay. So we have what? Financial statements, key financial statements. What we have? What are these key financial statements? Useful economic information. Okay? So what do we have? Income statement, balance sheet, cash flow statement, change in stockholders' equity. That's it? Comprehensive income statement.
And disclosure.
Other comprehensive income statement. Comprehensive income, it's either income statement or comprehensive income statement. So you don't have both going together. Okay?
Disclosure.
Disclosures, exactly. What is disclosure?
No.
Okay, some of us don't know what
disclosure, a lot of disclosures can be. In real company,
Important
disclosures can be
information.
of addition to the reports, audit reports.
Yes.
Or disclosure can be internal. For example, you can interview with all company guys, for example, the key persons, and you can disclose something. And know something. Okay. This also can be disclosure for your financial.
Agree.
What
So
do you mean?
Not the financial.
But no, it's a standard.
So we have what is useful information? This is for key financial statements.
This is the standard.
Okay, this is standard. And also there is another standard one, which is footnotes.
Yeah.
Okay, footnotes, which is also a disclosure. And then we have management discussion analysis, which is also a disclosure, but which is not a footnote. And we will find out the difference. Okay? So before we move on, okay, income statement. What do we have in the income statement?
Income from sale.
No, as a cluster. Yes. We have. Simple.
Profit and loss.
Profit, expense, then we have net income.
Like that.
Yes.
Like
Like
that.
that.
Expense and everything.
Exactly. We're on the same. I'm happy that we're on the same page. And then then we have cash flow statement, right? And what is the difference between those two? Why there is a need for income statement and cash flow statement?
For example, depreciation expense is not cash expense.
Difference comes with accruals.
There are accruals.
What is that?
One is accrual
Two
based.
types.
What is that? Why there is a need for accrual space? I hear you, yeah, you have to know it.
Matching.
What, not matching. And matching is part of the
Yeah, of course, but
After a certain period of time, for example,
Okay,
you have certain liabilities and you recognize it as an expense.
so but wait, why there is a need for this? I mean, why? Okay, I'm a business person, you know. I'm interested in what? I'm interested in seeing the real value of business. I mean, this is, you know, what we are proposing right now. That okay, when you're making sales, right revenue, you know, this is just, you know, lying to yourself. You know, you have to receive cash at the end of the day. Why there is a need to? I mean, I have made sales, and you know, I am the owner of, hopefully, I'm the owner of Coca-Cola, and you know what I'm saying. Okay, we are selling 100 Coca-Cola, and you know, there is no cash in the business, but we are saying we have 100 sales. So what is the purpose of lying to yourself?
at first, let's begin from the local accounting. Okay, in that case, local accounting should pay the tax. Tax should be calculated based on these accruals. As a local accounting, because you cannot pay the cash based on the.
I'm asking you before that. You know,
No.
Why there is a need for accruals in general?
I think in general, I think this is the principle, right? Accrual principle. You should recognize your revenue.
You must know your net income.
Expense based on these.
Why?
Okay, why?
Why accruals?
That's a very good question. Because we did it because we do it. We should do it like that.
Because our forefathers did it.
Yeah, yes, like that.
No, come on, we
The
cannot
other
do
person.
this. What is the reason for accruals? Hesaplama metoduna göre yapacağız ya.
Ben yaxşı sualdır. Səbəbi niyə belə? Məsələn, biz belə eləyirik çünki eləməliyik. Amma belə bir fikirləşək də maliyyə göstəriciləri düzgün analiz
Share
etmək.
of profits.
Yapılması. The most important thing about, you know, in financial, why we talked about, you know, the role of the financial reporting. This is, you know, the information. This is the useful information to make economic decisions, right? To provide useful information to make economic decisions. To provide useful information and consistent information. So let's say, you know, you are operating a company, and you know there's a need for 1 million worth of property, plant, and equipment. Let's say, I don't know.
Of course, that's investment.
Yes, 1
Should
million.
accrue this.
Let's say, you know, a plant, double, okay? 1 million. What we could do, cash versus accrual, let's say. Accrual.
Ancaq mən bunun cavabları fərqli olacaq. Bu çox subyekt. Real biznesdə bu biraz fərqlidir. Yəni, niyə biz kəş etməliyik, niyə accrue etməliyik?
Niye accrual'a geldiler onu?
Niyə accrual'a gəliblər məsələsi çox şeylərdən çıxardılar. Bunun bir standart cavabı ola bilməz.
Cash yani cash'ın bilmək üçün en iyi cash.
Yes,
Accrual ise profit and loss da yani net income bilmək.
Biz indi neye cevap verdik buraya?
Standartda niyə gəlindi? Why we come to this accrual basis?
Why there's
Why
a...
we ignore this cash basis?
We don't ignore this.
In the reporting statements.
Why there was a need for...
Yeah, why we...
What's your name?
Aras.
Aras.
Maybe because of the financial calendar period.
Here.
For example, incur this, you will incur this financial period, this financial calendar, and you will get reviewed next year.
Okay. I mean, again, you know, I haven't received cash. Why I'm lying to myself?
Report expenses.
Accounts receivable. This is an element of accruals method. I'm asking you why. You know, why we are lying to ourselves? There's no cash.
Matching period because of the expenses also can be.
Matching is also part of accrual. Before that, why there's a need for
Let's
accrual?
summarize all this and let's say that to accurate financial analyzing, to achieve accurate financial
Stable
analysis.
financial.
Yeah.
Exactly.
Yes.
Stable financial analysis.
Only-
Stable financial reporting.
only
You know,
this.
we have 1 million investment into property plant equipment. What we could do, we could right away write it as an expense here, right? Expense, right? 1 million. 1 million, right? And then let's say we have this year, we also have each and every year we have, let's say, 5 million.
Yeah.
Not 5 million. I want to show you the magnitude. 500,000. 500,000 revenue every year. Like 500,000 received every year. Cash revenue. Okay? So what we have here, if we look at it this way, what we have? We have, in the first year, 500,000 revenue, 1 million expense. What we have 500K loss. Next year we have 500K,
Yeah.
500K
Totally agree.
revenue. And then we have, you know, this. And then here we have, here, you know, we depreciate it for 10 years, let's say. Every year, what we have 400K. Every year we have stable.
In the cash base, there is no stability.
There's no predictability. And what we do it, I mean, financial reporting does not give you, you know, it does not indicate what's going to happen in the future, but you might infer some useful information from those data. Okay? So what the main reason, this took me a lot, you know, long time to explain all of it, but you know, the main reason is stability. And Accrual method provides stable financial information. Okay? Any questions? So, income statement. Income statement, what we have revenues, expenses, gains and losses. What is the difference between revenues and gains? Or expenses and losses?
Revenue minus expenses is gains. Before we paying our expenses, we don't know our gains.
That is profit.
What was the question?
What is the difference between revenues and gains? Or expenses and losses? So what is your name? Atakan, what is the difference between revenues and gains?
This is
Is that a simple question or?
This is a simple, relatively
This is
simple question.
practical.
I mean, this is also a simple question. If you look at it, it's a-
Revenue expense gain and loss below it. If you make this, for example, let's say if you sell asset, this is the
below
gain.
EBITDA.
Yeah, yes.
Okay, so let's say you have
So because this is not the ongoing process. Gain and loss is extraordinary.
Exactly. Not extraordinary. right?
Not your
Revenues
operations.
are from major or central operations of the company.
Yes.
So the company is Coca-Cola, you know, it's providing,
Yeah.
it's selling Coca-Cola.
For example, devaluation effect should go, let's say,
For example, or, you know, Coca-Cola has some, you know, properties that it's renting. This is, you know, the money, the revenue that it's getting from rent of those, you know, buildings or whatever. It's gain. It's not major. It's not central. It's not core operation. Okay? So if it's major or central operations, then it's revenue, and then if it's major or central operations, it's expenses, non-operational gains and losses. Okay? Okay. This is just the definition. We know what's revenues, right? Inflows from delivering economic benefits, not inflows. I would say revenues are economic benefit from delivering goods and services. Okay? Expenses are economic outflows, not outflows, economic outflows. You know, there might not be, you know, a cash outflow for you at the moment, but you know, there is a service provided. or your inventory is gone. Okay? Okay. Ordinary courses of business, not from ordinary courses. All right. All right. What else we have? We have balance sheet, and why? Okay, balance sheet. What do we have in the balance sheet? You have the names here, but what are these?
Assets.
Assets.
Assets are what the company owns, so it's therefore its shareholders or
Current assets and non-current assets.
Okay, we have assets, which is divided into current assets and non-current assets. But what is assets, and why there was a need for assets in general?
assets is the resources that the company owns.
Resources that will provide future economic
Yeah,
benefit.
future account.
Okay? So, this is all games, right? I mean, honestly speaking, this is all games. Now, how you record, there's a 1 million cash burn from you. In any case, this is out of your pocket, right? This is how you define, actuarial accounting tells you how to define those 1 million. If you can prove that this provides future economic benefit, then you write it as an asset. If you cannot prove that it provides future economic benefit, then it is expense, right? So the difference between assets and expenses is that assets provide future economic benefits. Expenses, assets provide probable future economic benefits. Expenses also provide future economic benefits, but you cannot measure it. Okay? You cannot measure it with reliability. Any questions so far? No? No. Okay. Statement of comprehensive income. So statement of comprehensive income and statement of income statement, these are practically the same thing. The only difference is that statement of comprehensive income, this is equity. This is change in shareholders' equity for shareholders' equity. So comprehensive income shows you what was the change in the equity shareholders' wealth. Okay. It includes, except for shareholder transactions, which is new cash coming in from new investors. This is excluded. So what does it include? It includes income statement items plus other comprehensive income statement